Good afternoon, everyone, and welcome to another episode of Your Daily 5 presented by StockCharts TV. My name is Grayson Roze. I'm the Vice President of Operations here at StockCharts.com, as well as the author of Trading for Dummies and Tensile Trading, the 10 Essential Stages of Stock Market Mastery. I am so excited to be here with you. I wish we had the cameras on. You could see my face. I got this big grin on my face from ear to ear. This is a big day, a big show. This is going to be our first all-ACP edition of Your Daily 5. So I'm thrilled to be here with you today to present it. Now, some of you are probably asking yourselves, what is an ACP? I've never heard that. I have no idea what you're talking about. So I want to give you a quick preview of what I'm talking about, the platform that we're going to be demoing today. And then we're going to jump into 5 of the charts that I'm watching really closely. And they're all going to be ACP charts. So let me give you the rundown. This morning, I published an article, which you can go find on our articles page, stockcharts.com/article. The article is all about the new features of what we call StockChartsACP. ACP stands for Advanced Charting Platform. And this is a new tool that we've been working on for quite some time. You can see there in the article, actually been a couple of years. But we've done something pretty unique with this new tool. And for the last 15 months, we've actually been bringing out new versions of it every single Friday. So we've really tried to involve our audience, involve you guys as sort of the stock charts community, and get your feedback along the way. We didn't want to just sort of build this thing, totally behind closed doors. We actually wanted to involve people and get you to see our process, see how we were building this tool and improving it over time. So all of that in the last 15 months has really been building up to this week, which is the version 1.0 release of StockChartsACP. Now, StockChartsACP is really an interactive, full-screen, real-time streaming advanced charting platform. There's so many exciting words that we can put on this. It's a dynamic and interactive charting tool. That's really the key with ACP. So it allows you to actually sort of reach out and almost grab your charts by hand, scroll through time back and forth. You can manipulate the y-axis up and down. And my actual favorite feature of it, you can drag your indicators from panel to panel up and down the charts, just sort of all around. You can grab the little labels of the indicators and actually move them around the screen just by dragging them. So your cursor really kind of becomes an extension of your hand, and it's almost as if you can just reach out and grab your charts right there in ACP. So it's a very, very dynamic and interactive, flexible tool. And it's a really kind of the next generation of stock charts technology. So this is something that we're launching this week with version 1.0, but it's going to continue with this sort of weekly cycle. Every Friday, we're going to be putting out new updates, new improvements, new releases, all building to another mega release that we're planning for this fall, early fall, sort of late summer, early fall. That's going to bring out a total revamp of our annotations tool, additional trading features, lots of good stuff. But in this release, what we've added are some huge, huge features. Most notably, we now have the ability in ACP for you to save your charts. So you can save your charts into your own custom chart list right there in ACP. You have the ability to save chart styles, which are sort of chart templates that you can return to in the future. We have plugins from an incredible collection of technical analysts and also us. We've actually built our own plugin. Plugins are sort of an extension model for ACP, which is very cool. And trading. We actually have the ability to trade directly from the platform. We're offering unlimited commission-free trading through Tradier Brokerage, which is a new partner for us. So actually in ACP, you can place trades directly from the platform now, which is a huge, huge addition. So there's tons to explore. I want to point you to this article, this ChartWatchers article. Go check that out, scroll through it. You'll see a lot of the new features and just sort of highlights of what you can do with the platform. So now that I've given you kind of the background, let's dive in, and I'm going to show you 5 of my top charts for right now. So first up, what I have is something that I like to call my ultimate S&P 500 chart. Now, what's interesting with this chart, specifically about the ACP platform and the view that you're seeing, this is actually with fit to window mode on. Fit to window mode are these little arrows that we have up here in the top corner. And what that's going to do is take the entire chart. If you have sort of a tall chart like this, it scrunches it down and puts it all in the window. Now, you can turn that off. And if you turn that off, this chart would actually go outside of the browser window and be a lot taller. So you sort of get like a full view of the chart. For the sake of today, I wanted you to see everything all in one view. So I've put fit to window mode on, but a really cool platform setting that you can actually go play around with on your charts there. Now, in my ultimate S&P 500 chart, there's a lot here, so let's dive into it, unpack them all. What we have here is the S&P 500, just a simple chart of the S&P 500 with the 50-day moving average and the 200-day moving average. Now, the key is the 200-day moving average, and the way that we sort of traded around this level in the last couple of weeks. We've bounced off that 200-day moving average twice in the S&P 500, which for the bulls is definitely a positive sign. To see that sort of holding up there in the S&P 500 is a big point for the bulls. So I'm watching those bounces off the S&P 500's 200-day moving average as a key indicator. Now, on this other panel here down below, we have the percentage of stocks. This is a breadth measure. The percentage of stocks in the S&P 500 trading above their 200-day moving average. This, unfortunately, is not what I want to see. So this line, this horizontal line, is 50%. This is a percentage measure. And so what we see is more than 50% of S&P 500 stocks trading below their 200-day moving average. That is weak participation in this move. So we have a market that's going higher with the S&P 500 moving higher and bouncing off this 200-day moving average, but we don't have it sort of confirmed by a majority of stocks. We have a majority of stocks actually under their 200-day moving averages, which is weak breadth. Now, the bulls do have a couple other points, though, that I'm watching really closely. This panel right here, the red line, you'll see here, XLY to XLP. This is what we call the offense versus defense ratio. So these are an offensive sector and a defensive sector. Consumer discretionary versus consumer staples. And when this ratio is going higher, that means that the offensive sector is leading. Now, when this ratio is moving lower, as we can see back here, that means that defense is leading. So in a bull market, what you really want to see is offensive movement in the market. You want to see that offensive sector leading, and you want to see this ratio moving higher. So we have that right now, which is a good sign. Similarly, across a couple of these other ratios, we've got growth outperforming value here. That's what this green line represents, which is positive. We've got momentum leading to the upside. This is momentum versus the S&P 500 versus SPY. And what we have is this ratio also moving higher, which means that momentum is trading well, which is a bullish sign. We have the S&P 500 here in these next two panels versus mid caps and then versus small caps. We can see actually SPY versus MDY. This is the S&P 500 versus the S&P 400 mid caps. When this is going higher, that means that the S&P 500 is outperforming the mid cap group. So that's an interesting sign. We have seen sort of this shift back and forth between the mid caps and the small caps and mid caps and large caps, excuse me. And so to see this, continuing to go higher, that means that the big cap stocks are really starting to lead again. We're seeing the same thing here with the S&P 500 outperforming the small cap index, which is interesting. Now, this bottom panel, we'll dive into this really quick, is actually an interesting one. This is the equal weight version of the S&P 500 plotted against the standard version of the S&P 500, which is cap weighted. So what we can see here is the S&P 500 leading mid caps, leading small caps, but then even within that group, we can see that the cap weighted version is leading the equal weighted version, which means that the biggest of the big caps are really leading higher here. So anyways, this is a lot of different ratios that I watch that are all related to the S&P 500. So that's why I like to call this my ultimate S&P 500 chart. Now, on the next one, we're going to kind of dive into three other groups that I'm watching as a good sign for the bulls. So here we have XBI, which is biotech, and that's climbing up to new highs, has been very strong throughout this year. So XBI, sort of an aggressive sector, biotech, an aggressive sector or industry group, making new highs. That is, to me, a case for the offensive side. Similarly, we have semiconductors continuing to climb to new highs. Semiconductors making new highs. That's offensive for me. That's bullish for me. Then we have an online retail index, which is IBUY, and doing the same thing, climbing up to new highs. So when I'm seeing these three groups making new highs, and not only that, down below, I have all three of those charted against the S&P 500. So again, ratio charts here. These uptrends that I'm seeing in these ratios, where all three of these groups are outperforming the S&P 500, to me, all of that is bullish. These are offensive sectors. These are people really looking for big growth and sort of going for big growth trades. So when these are leading, I like to think of that as quite bullish. So that is another good case for the bulls. Now, I got to give something to the bears. What we have seen is a remarkable shift in the earnings charts. So these are some charts that I like to look at to plot S&P 500 earnings. Here we have earnings for the S&P 500, and here we have a ratio of the S&P 500 versus earnings. So what we can see is when this line is going up, that means earnings are going up. Companies are growing their earnings. They're continuing to go higher and higher. That is really, really positive. This is a 10-year chart, by the way, so this goes back a little bit further. When earnings start to go down, it is just very, very, very hard for the market to continue to go higher. Now, what we've seen here is such a dramatic shift in the earnings charts with this big, big drop off. So I'm watching these earnings reports quite closely. There's just so much uncertainty around corporate earnings right now, specifically, in a big group like the S&P 500. So I'm watching these earnings charts quite closely. If we see this continuation of just deteriorating earnings, that's going to be a big, big headwind for the market. And there's still pockets of it, like we were showing there with the online retail and semiconductors, some of those spaces. But overall, earnings declining is definitely a weak point for the market. Now, one other thing that I'm watching to go kind of outside of just the S&P 500 and the US, this is an interesting chart. This is VWO, which is a Vanguard Emerging Markets ETF, and VEA, which is the developed world. So I look at this chart every week. This is the developing world sort of versus the developed world, emerging versus the rest of the world. Now, what I'm seeing here is in the last couple of years, we've seen a pretty weak sort of stance from emerging markets. They haven't performed that well. We've seen a lot of weakness out of China in particular. Now, that's starting to change all of a sudden here. So what we can see is the developed world kind of going sideways at the end of this chart here. You can see that's the green line. That's kind of going sideways. But we have emerging markets climbing up, really rocketing higher. And in the ratio, when we chart a ratio chart of that, VWO versus VEA, so emerging versus developed world, we can see this ratio moving higher, which means that emerging markets are really starting to outperform the rest of the developed world. That is an interesting point that I'm watching, and a good place to look for maybe an emerging trade here. Nice little pun for you there. So I'm watching this ratio quite closely, watching the emerging markets world quite closely. Now, one other thing, I would be remiss if I didn't leave you with a good old-fashioned stock pick. I am loving the chart of Intuit right now. This is actually one from what I call my 10 I'm Stalking list. That's a list that I put out every Sunday on Twitter, 10 stocks that I'm following for the week that are setting up nicely, generally breaking out to new highs, showing nice outperformance and strong accumulation, strong relative strength, and money flow. What I'm seeing here in Intuit is a stock that's breaking out to new 52-week highs. If we had a line across the chart here, you'd see this is breaking out to new 52-week highs, starting to outperform VTI. That's what this is. This is Intuit versus the total market. So starting to outperform the total market, showing relative strength there. RSI, not really at bad levels, not overbought or anything like that, which is nice. And then big accumulation. That's what this chart is, the accumulation distribution. And in the gray, we have on-balance volume. I like to see this sort of leadership of accumulation distribution. So that trending higher is very, very bullish for me. I'd love to see that. And then the scooter line at 85. So not stretched up to high levels, but still at sort of a comfortable point there. Intuit, I think, is setting up really, really beautifully. This was, again, one from my 10 I'm Stalking list. So if you're interested in that, go follow me on Twitter at Grayson Roze. You can see the list that I put out every Sunday for the 10 I'm Stalking. So this was one off of that. Now, I want to direct you back to this blog. Hopefully, you've had a good sense of kind of what ACP looks like, what you can do with it. The key here is that the ACP is an incredibly dynamic tool. It really is an interactive charting platform. So there's a lot more to explore, a lot more for you to see. So definitely, after we're done here, go read this blog. You'll get a good sense of what's included in the new tool, and then go play with it. There's a lot to explore there, a lot for you to get involved with and see and play around with. So definitely go explore ACP. I think you're going to have a great time. If you're interested in any of my stuff, you can follow me again on Twitter at Grayson Roze. Check out any of my books or visit me at Stock Market Mastery. Anyways, thank you so much for watching. This has been a ton of fun, and we'll see you very soon for the next one. Take care, everyone.
Hey, Grayson Roze here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.